What's up, everybody? Welcome to the life cycle of a trade, the series where we break down the thought process behind the trade entry, trade management, and the closing order. In this video, we are going to cover a butterfly. Today we're going to put on a trade that I love to do to get a little bit of short delta and some long volatility in a smaller sized account. It's a butterfly in SPX. So in SPX, which is the S&P 500 index, I typically like to go somewhere around 30 to 60 days out in time here, where you can pick whichever expiration you like. They are very, very liquid. They have dailies, they have monthlies. All of them are liquid enough to trade. Here, we'll go somewhere around our 45-day time frame. That's typically where we enter our trades. Here, we'll do, as an end-of-month trade, a sell in May and go away, if you will. We're going to pick the May 31st end-of-month expiration. So for these trades, I typically like to go to somewhere around the 30 to 40 delta for the first long option of the butterfly. A butterfly is a 1x2x1 trade, equal width on both spreads. It's a long spread and a short spread on the same side of the stock. So here, I would go somewhere around the 5,000 mark. Let's call that our long option here, about a 32 delta. I like to go between 100 and 200 points wide on my butterflies in SPX. So let's say the 4,900 here for our short strikes. And to cap the risk and make this a fully defined risk trade, we would go out to the 4,800 strike and buy one of those 4,800s. These spreads typically trade somewhere in the 1,000 to 2,000 range, depending on the duration, depending on how wide your spread is. A 100-point wide spread is a little bit less. If you go into a 200-point wide spread, it'll be a little bit more expensive. Now, looking at the risk profile, this is what our trade will look like at expiration. But this is a very dynamic position because it's a short delta play as well as a long volatility play. We can see on the right side here, if we do some analysis here, we can add a little, we could go a little bit further out in time. We can change some of the volatility here. So if we adjust this volatility and say volatility spikes up a little bit, you can see your profit range and profit potential gets much wider as those two things work in your favor. So it's a fun little short delta, long volatility play. We've had a little bit of an up move in the market from the lows that we've recently saw. Thinking that we might see a little bit of downside here at some point. This sort of trade will definitely take advantage of that. So we'll route this here at 850, which is right around the mid price. Let's see if we get filled. And we're in 850 on the SPX butterfly, 100 points wide, a big wide butterfly, a little bit of short delta. All right, so we are back. Markets move quick, and we have a closing trade that we have held for 1 day here. So as you can see in the market today, you've got the E-minis down 68 points. That's the S&P 500, as well as a pop in volatility, up almost 4%, a little bit over 4% now. So both those things have benefited us for this trade and into this move down. So for SPX, we had the 36-day trade. We're now right at the money on this butterfly, this out-of-the-money butterfly. It's a perfect time to close this trade and take some profits on what has been the perfect move for us this morning. So the way to close this trade, you would click the bid price on your long option to sell out of the 5,000. On the short options, we'd want to buy those. So to buy them, we click the ask price. In this option, we have 2 of them, so you want to click it again to adjust the quantity so that we would be closing both of those shorts. And then for our remaining long on the downside, the 4,800, we would click the bid price to sell out of that trade. You can see the mid price here is trading around $11.80-ish cents. We originally opened the trade at $8.50, which leaves us a potential profit of around $300 and change. So we'll sit here and route this order at the mid price. Let's adjust this again to $11.80. SPX trades in nickels, so they trade in 5-cent increments. And there is our fill. So SPX, we got filled at 1180. It was a one-day trade here, so we had this 5,000, 4,900, 4,800 equal with butterfly, 100 points wide on each spread. We closed that out for a net $330 profit there. A nice little trade for us on the board.
Comment below on what strategy you'd like me to cover next. If you want to catch these trades live, tune in to Johnny Trades every Wednesday at 9:40 a.m. on Tasty Live. Peace.